I think when it comes to investing strategies, there really is no right or wrong. It's really up to you and your creativity, your risk tolerance, and ultimately creating your own strategy that works for you. In this lesson, I would like to just look at a couple of points, a couple of examples, 1 slide, 2 slides actually only, and keep it brief, keep it short, and see for yourself if you can come up with a investment strategy. Let's say that you start with $100,000. Right now we are, when we're recording this, we're still in this Corona pandemic. So try to incorporate that in your investment strategy. For students of the minor, this is a mandatory assignment. It's also exciting, I hope. It's a mandatory assignment, and it's one of the biggest assignments. I would like to see if you've learned a thing or two in the previous lessons, and if you can come up with a creative investment strategy for, well, let's say the next 5 years or something. So go get started with that after the video. Let's look at a couple of slides, and then we'll skip to the next lesson. So there's a ton of things that you can do when it comes to investing strategies. I think at the basis, you should keep in the back of your mind that compounding is a very powerful thing, and that you shouldn't put all your eggs in one basket. So diversification is a very powerful thing to keep risk in your portfolio low and to profit and benefit from several sectors, perhaps. Another thing that I don't think I've mentioned before is dollar cost averaging. And this is buying assets over time periodically in batches. So say that you have $1,000 to invest. Don't invest it all at once at one point in time into one asset, for example, but take your time and spread the $1,000 investment over, for example, 5 months. So if you want to invest in the S&P 500, you just want to buy the index. You can do so by spreading your buys out over 5 months. This is called dollar cost averaging, and it's considered a good strategy to get started. Another strategy could be that you invest only in stocks that also pay a dividend. There are stocks that don't, and this could be an extra source of income. Mentioned in the previous lesson, allocation in different sectors. I'm not going to talk about that again. And a good strategy could be, for example, trying to figure out what percentage of your portfolio you would want to have invested in bonds and what percentage in stocks. There are famous ratios for that. Look them up online. If you Google the ideal bond-stock ratio for a portfolio, you will get it. It's a very famous ratio. And see if that is something that works for you. Perhaps you don't care about bonds at all and you enjoy a bit of risk. Like I said, entirely up to you and your creativity. Last thing, you can be an active investor. You can be a passive investor. You can invest once and just forget about it. And perhaps, as we've seen in the lesson compounding, add funds periodically, let's say once a month. But you can also be a little bit more active, in which case we already start to shift towards more of a trading type of investing. More on that, of course, in Chapter 3 and in Chapter 4. I want to close this lesson off by showing you this S&P 500 historical annual returns chart. If you don't have the time to research all sorts of sectors and companies, then it can always be a good idea to just invest in the general stock market. As you can see here, there is a lot more green than there is red, and the average return on the S&P 500 from 1928 until now is somewhere between 10 and 11% annually. So this could be a very passive investment strategy. You just invest your money into the index, and historically looking, you would have done great. Key takeaway for this lesson is that it's up to you and your creativity to go on this treasure hunt. I will see you in the next video, Managing Investments.